Let's focus on the FMCG sector. The recent numbers reported by various listed players have pointed fingers to a softening demand growth in the consumer sector. Now, to discuss that and also the major trends witnessed in the sector, we have with us Vishal Gutka of PhillipCapital to take us through the specifics. Hey Vishal, thanks so much for coming down to the studio. Well, we want to talk about a lot of these FMCG stocks, but earlier today we had the management of Titan who joined in. And they said, yeah, things were quite soft in July, but things have started to look up in August. How do you view Titan as a stock? Because it seems that the street is quite excited on the back of that commentary. Today, the stock is up close to around 3%, though as you see, the last 3 months, the stock has corrected nearly around 15%. Pull up an intraday chart, and you'll see the stock has moved higher. Tell us, Vishal.
Good morning, Mangalam and Nigel. Thank you for having me over here. So Titan, basically, if you see the discretionary part of the purchase, where the major revenue comes from Titan. So wedding and festival will continue to do well. We don't see any major issue out over there because the fixed budget allocated to there and consumers will spend over there. What our ground check suggests that July was very bad for the industry as a whole. There's a 35-40% decline in volume terms. Slight recovery has happened in August. But again, the problem what has happened, the prices have been very volatile of gold. The prices of gold in last 3 years, if you just see, it has come down from 40,000, 38,000. I think it is just taking away back customers, and I think it is the performance is likely to be weak in the coming quarter as well. Based in second half, we may see some slight recovery, but we are not very bullish on Titan per se.
You're not very bullish on Titan per se, but after the wedding, I wouldn't know as much. Nigel would know. Comes a lot of detergents and dhulai, Nigel, perhaps. So let's talk about your report.
A lot more than that, but we'll keep that for offline.
All right.
You're quite excited about the wedding season.
No, I'm talking about the detergent business that he's spoken of. You said discretionary is doing well, so people who are buying, a section of people who are buying are continuously buying. So your report, which talks about premiumization in the detergent sector, HUL, you say that super premium contributes about 2% and 42% is premium. Currently, the stock is at the high point of the day. What is your thesis? How much can this premium contribution increase by over the next couple of years, and what does that mean for their EPS?
So if you see at the company level, it is around 28% of the products are premium products. Management has a guidance of increasing the premium product by 1% every year. What we believe in the detergent space is around 22%, where the margins are pretty high. Of the premium brand, the margins is the gross margin in the range of 50%. Where you see in the economy side, the margin is around 25%, double of that. So what we believe in next 3 to 4 years, around 40 to 50% EPS growth is possible, because that is likely to come on back of acquisition of GSK, which is likely to be done by end of 3Q FY20, which we believe is going to be a major trigger for the stock, because as you know, GSK is only present in East and South, mainly into East and South, and they will take it pan-India, something similar what they have done with Indulekha as well.
Okay, but what's the target price you have on Hindustan Unilever? I remember
as of now, the target price on the stock is around 2,000 rupees.
2,000 rupees. When it was 1,000, 1,200, 1,500, 1,600, everyone said it was expensive. And the stock today is at around 1,850. It goes to show, the bluest of blue chips, as we say, they get those kind of multiples, and that's continuously buying. But another big topic in the last month or so was about biscuits, whether GST was affecting the biscuits, whether there was a consumption slowdown. We had Parley who joined us, and they said they're going to cut jobs if that GST is not going to be cut down. But from there, we saw BRITANNIA give you a nearly 15 to 20% returns. What's the view on the stock? Because even after those returns, the stock is considerably off the high point that we saw in the last 12 months.
Yeah. So if we see the near term, the performance of BRITANNIA is likely to be for the coming quarters. Otherwise, on the steady state trajectory, we expect the performance to be quite healthy. What is the problem in the biscuit is basically on the value end, the Parley, where the rural focus is there. There, the people are cutting down on consumption. With regards to in urban areas, we have not seen any major cut down in consumption. People are consuming. The healthy growth has continued. Even if you see for Parley, premium side has grown well. The value side, because there was larger contribution coming from value, they have been significantly more affected than BRITANNIA. BRITANNIA, we continue to like the story as a whole, but as of now, we see the valuation seems to be quite rich because whatever they are earning, they are plowing back into the fixed asset kind of creation. So if there's a correction on maybe around 5 to 10%, it would be buyers on BRITANNIA.
All right, buyers on BRITANNIA after a 5 to 10% correction, and the companies say that there would be buyers for cookies if there is a 5% correction in the GST. We'll keep an eye out on how that pans out. I was looking at your report on Asian Paints as well. Interesting, because the stock is very close to its record high, and at a record high, you've gone ahead and increased your EPS estimates by 2%. And not just that, with an increase in EPS estimate, you've increased your multiple from already 45 times to 50 times. All of this is great. What are the downside risks? Because at high multiples, disappointment in growth, and let's boom.
Two downside risks. One is with regards to the raw material inflation, as you know, crude. it has been uncertain. No one knows about it, how it is going to pan out. But as of now, the situation seems it's likely to remain soft in the coming years. Secondly, with regards to discretionary spend as a whole, if there is a further slowdown in economy, there could be risk to the demand downside. But what are we seeing in paints is basically the people are spending more on the renovation of house. The repainting cycle is reduced from 5 years to now 2 years. Secondly, a good amount of shift is happening from unorganized to organized because the pricing differential between the branded and unbranded has reduced significantly now.
Does that not impact their margins then? Because the lower end of the products will do well. And if you're saying that painting cycle has come down, there is a Berger Paints, there is Kansai Nerolac and Pidilite as well.
There is a moat around that the Asian Paint has built in. They have more than around 40,000 tinting machines that are there in the system, which gives a significant sustainable competitive advantage versus other players.
Yeah, you know, it looks like you're tracking all the family stocks. You know, Mangalam is interested in gold. He'll be painting his house, I think, because he's got a big event coming up later this year. But let's talk about ITC.
Yeah.
You know, that's a stock that people argue value or value trap. What is the view out there?
I think it's more of a value trap going forward because I think we are in a structural decline in that industry because what is happening with regards to the other two competitors, VST Industries and GPI have started gaining market share. Plus, they are not very focused on the margin part. So I think they are giving a good run for money to ITC. Secondly, with regards to the 64mm segment, the contribution is increasing, where the margins are a bit lower than the overall margins.
And that leaves us with two last players. We have Dabur as well as Godrej Consumer. Dabur, everyone's talking about Ayurveda, Patanjali's decline doing well for them, etc. Godrej Consumer is the other one where the multiple decline in terms of valuation has been the highest in the FMCG space. So does that make for a good buy right now, or you'd wait?
I would like to suggest to wait because the main segment, that is household insecticide, there's been a lot of volatility in their performance because due to various factors, as you know. Second reason is with regards to their international geographies. There's some other geography going wrong for them in a particular year. Maybe it could be Indonesia or it could be Africa. Something other is going wrong. I think we should wait for a lower level and to get further clarity from the management with regards to the sustainable performance in the coming years.